Cool. Welcome everybody that's in the upgraded private room with Carlos. Most of you guys, I think, know Carlos Samaniego, an EA, really one of our thought leaders on the tax problem resolution side. And so just to frame like what's different about this private conversation versus the free webinar that you just watched, is we want to talk about like the technical training that Eva put for us, and talk about how to apply it to help real clients and to make real money. And so Carlos is somebody that's doing this kind of work with real clients every single day. I've been known to do some of this work as well myself. And so we want to focus it on like make sure that when you upgrade, you have a really nice return on investment from your upgrade. And so we're going to talk about those business development ideas. And so Carlos, I guess in general with IRS collections, I mean, I know there's different stages of trying to understand like what step of the process that the client's in, right? And Eva talked a lot about the technical side of that. How does that play into like when you're intaking a client or quoting out prices for a service?
Well, there's a couple of stages. Right before you got on, I was talking about a case that I had where this was a client that I call it the non-urgent, non-emergency type of stage. This is a client who hadn't filed tax returns in years, but IRS hadn't talked to her. There was no state agency involved, but it was just sitting in the back of her head. And it's like anybody that has tax problems or hasn't filed returns in a long time, it's always in the back of your head. You're always kind of concerned about that. So it's really kind of a non-urgent situation. But she actually just reached out to us to say, hey, I know this exists. She did get an annual letter. You know how the IRS sends the annual letter of past due taxes, which they send on a yearly basis. So, and I think that's kind of what triggered it. And actually, if you get in this field, those annual letters tend to trigger a lot of business because she actually got that annual letter and she had called me up and said, hey, Carlos, I don't even know where to begin in this situation. Non-urgent, situation. So with her, it was more kind of an investigation thing. Well, let's do an investigation, see exactly what's going on, see where you are in the process with the IRS, and find out, what years you did return. Because I had asked her, do you kind of know which returns you had filed? She's like, well, I did file 2019, but I don't remember the last year. So there's a non-urgent situation. So, that fee is going to be dramatically different compared to somebody that, I just got all my money taken out of my bank account or I got a levy at work. Those are two dramatically different cases.
And with the seasonality, Carlos, not to cut in on you, but like what I think this is important for people is with the seasonality, is there when do those annual notices go out? Or is it a certain season or is it all throughout the year depending on the taxpayer?
I think it's depending on the taxpayer because literally I'm starting to realize, I think the October, November timeframe, that's, I think I showed you the last meeting, I showed you a stack that I got. It was literally a stack this high of the annual notices that went out to all my clients I'm working with, or at least I have a power of attorney because I get a copy of that.
Gotcha.
So again, and then for other people, they get them throughout the year. So this is the type of work, if you decide to get in this type of work, is people always ask me, are you in your busy season? Well, for me, it's busy season all year long. Because this stuff is happening. The IRS is issuing levies, the state's issuing levies and liens. There's paperwork going out. So this is just a great side of the business where you're busy all year long if you want to get busy all year long.
And so would you say that it's a fair statement to say that depending on the urgency of the situation kind of will change in a way like what you would charge for taking on that kind of client?
Absolutely. It's 100%. In fact, I have a pricing guide, which just gives me an idea of where I'm going with something. And I have a special pricing for something, if I'm dealing with all these cases and somebody comes in and has something that has to be dealt with today or in the next week, I got to put everything else to the side. So I'm going to charge a premium just to be able to do that.
Gotcha. Okay. And I want to, as we go through this Q&A, you guys, I want to continue to like make it as interactive as we can. So if you want to press that button to raise your hand to speak, I'll be happy to see if we can get you on here to discuss with us live. If you've got the guts, to get on and see how your audio works out and, get all nervous like we do. But,
Sandy just asked a really good question. Does the 10-year clock apply to the state of California? No, it does not. State of California, their actual statute of limitation is 20 years for state taxes. And I tell people it's pretty much forever. And here's the reason I'm saying it's forever is anything that can delay them collecting it delays the collection statute. As an example, I have somebody who has a huge child support bill. Child support goes in front of tax debt. He's not going to pay this child support probably in about 20 years. It's just that much money. Guess what? The state statute starts at the end of those 20 years or whenever he actually pays off that balance. If you file bankruptcy, the list is literally that long of all the things that stops the California statutes. So that's why it's so important if you're in California or you have a state agency to deal with the state tax problem first and figure out some type of resolution because that problem is not going away. It's just not.
Interesting. And so I think definitely one of the biggest fears for people that when you're dealing with a collections issue is that, like we would do something, especially with filing a return, that would extend that statute of limitations where, like that's kind of like a fear where people might know enough, like, hey, I went to this presentation with Eva and I know I have to be careful of that. And so I think Marley has a really good question here of, along those lines, right, of like, so if a client files a return after a substitute for return has been filed, so in other words, the IRS filed the return for the taxpayer, does that 10-year statute, does that clock start at that point?
Oh, awesome question. I'm going to say why this is so awesome. Actually, Andy, right before you came in, I started with the story of a client that hired me. It was a non-urgent situation, has a whole bunch of unfiled tax years, and she went to a tax preparer and wanted to file a tax return, file all the back tax returns. And she was getting ready to do that. She had a 2007 tax return with a $15,000 liability for a substitute for return. So her friend happens to know me, says, hey, I want you to talk to Carlos before you go do anything with this tax preparer. I just got the transcripts yesterday, and that 2007 statute of limitation expires in 4 months. So now let's just say that she files a tax return and that $15,000 liability is lower. Let's just say it's a $7,000 liability now. Guess what? They got 10 years to collect on that brand new tax return that was just filed. So you just extended that statute of limitation, whereby in 4 months, the entire $15,000 gets wiped out.
Yeah, so I don't want to do that, right? That's what I don't want to do.
That's why when you're dealing with a non-filer, you want to, if you're able to represent the client, you want to pull those transcripts before you make that decision on what's going to get filed, or partner up with somebody that has that, because you can honestly hurt somebody dramatically by doing this really bad. And yeah, I've had multiple cases where people have come to me where I've seen that. I've literally seen where they went to their CPA, they filed all the back tax returns, which actually they put it turns out really bad.
Yeah, for sure. And so on that same kind of line of thinking, and with the idea that in these private room sessions, we want to make sure we hit on things that are actually going on in the lives of tax pros, like right now, for real. And so I wonder if you could comment, Carlos, on, I was talking to a tax attorney yesterday that was saying that he kind of made the point of like, there's never been a better time to wait out the statute of limitations because the IRS is so backed up on collections after shutting down for essentially 4 months. for the working professional right now that might already be doing this kind of work or getting more into it, how does like the current state of the IRS, in your view, impact those kind of, decisions and strategy?
They stopped collections in March. IRS pretty much has stopped all collections between March and now. Even as of right now, they're not really actively issuing levies and liens. That's supposed to start at any time. I was just talking to a revenue officer. He told me specifically it hasn't happened yet, but it could happen at any time. We know for a fact they're actively getting ready to start sending the 500 series of collection letters, which tells me that that's going to active collections is really going to start, because once they start sending out those series, those are all there's time frames that they have to respond to those things. So I honestly think collections has begun the minute those letters start going out. So in terms of if now's a great time, it's just because of the economy, a lot of people were impacted because of COVID. There's been, a lot of people aren't working or on unemployment. There's been no better time in history, I think, to deal with your past tax problems. Now is the time to do it if you're going to do it. The IRS is going to be a heck of a lot more lenient in terms of, lenient in terms of your excuse for not being able to pay or haven't filed. They're giving us a lot of wiggle room right now. I deal with revenue officers. I speak to probably a revenue officer almost daily right now. And, they're even saying, hey, how much time do you need? Or, I can give you this much time. I can't get a hold of our local San Bernardino office, IRS office. I had one revenue officer told me I haven't been able to get mail in almost a month. So now's the time to deal with it. At the same time, if you're in a state that has a state tax agency, you need to deal with it right now, because right now the state is so in dire need of money. Mm-hmm. They are being so aggressive right now. I mentioned, I think in the last call, that almost all the calls I've been getting literally in this last couple of weeks have been state levy issues. People, the state is levying people and taking money out of bank accounts and issuing wage garnishments. So if you can get out there and talk about that subject, people need your help.
Yeah, and I think the delay on this, this other stimulus package, right? A lot of that stimulus package is that money for the states to cover a lot of like the unemployment benefits and other, just financial needs. And so I think that's a really, really good point, especially if you are in a state like California that aggressively collects. Mm-hmm. So don't forget about the state. Always take that into consideration. Some cases more urgently. And I also, I wanted to put out there, like keep an eye on any new stimulus package in terms of what it means for tax debtors, because with all the small business failures and all the like PPP loan stuff and all that, there may be something in some of these packages that actually gives some kind of relief on the tax debt side. Mm-hmm. I personally think so. Just kind of keep an eye out for that. Carol said, Carlos, she has a question about I have a client who just called yesterday. The mom passed away over the weekend. That's always a tough thing, and that does come into play. I know a lot with tax problem resolution. Looks like she hasn't filed a tax return or opened up any letters from the IRS since 2011. Mm-hmm. She always filed married filing separate, and her power of attorney was her daughter-in-law. Who can legally sign her 2848 in order to get the transcripts? And that's something that I actually had dealt with a client as well. Have you seen that yet? Yeah,
I just dealt with one right now. Typically, it's going to be the executor of the, if she passed away, it's going to be the executor of the estate that can sign that power of attorney. And it's not her husband. People always think that it's automatically my spouse can sign for it. No. It's whoever the executor of the estate. And that's one of the big things right now, the importance of people signing, getting a trust and will done, because this can become a real nightmare real fast. So it's an executor of the state is the only person that's going to be able to sign that power of attorney. They're going to have a power of attorney to be, either sign a power of attorney or to hire somebody such as myself or a CPA or attorney to be able to get those records for her.
Yeah, absolutely. And so when I dealt with that for a client where we had a similar situation, Carol, the that Form 56 is the notice of fiduciary. That's the form that sends to the IRS, like, hey, I'm in charge of this estate. I'm in charge of this person's situation. And so they first requested that. Since that hadn't actually been done for this situation, I had to go through the practitioner hotline several times and get through several people. And they eventually accepted the trust document and a couple things from the lady's doctor actually authorizing her niece. And so it was a little bit of a process. And those are the kind of things where if you take that on, Carol, just want to make sure that you kind of account on your revenue, like what you need from it to kind of like represent the value of getting into that. So good luck with that. But yes, it can be done. The executor or trustee can sign if they're responsible for the person's affairs. So thank you, Carlos, on that. Anal says, I've seen the IRS change the CSED date. I've actually seen that as well and been kind of confused. I don't understand why, if nothing else is being done to the tax return, like what could be the reason that they're changing these all important dates?
There's a variety of different reasons it can actually get changed. Actually, Tax Mama Eva brought it up, and I'll tell you one thing, Andy. Just real quick on Tax Mama, she does an amazing job. I told you I was trained by her. Every time I watch one of those things, it's just I learn. It's a basic course, but sometimes you have to go back to the basics, right? And there's a variety of things. So a CSED date can be changed if there was a CP 2000 letter and they added some additional taxes. It can be extended for bankruptcy. If somebody files bankruptcy, it stops that date. It can be extended. A collection due process appeal, which is what I call it my emergency bat phone, where you stop all collections. And you got to be really careful. That's a powerful tool that we have in our arsenal, but you have to be very careful of filing that, because let's just say this one lady, again, I just mentioned to her, she had $15,000 gets wiped out in 4 months. And let's just say somebody files a collection due process appeal that stops collections. Well, we just stop that clock, which adds more time to that. And do you really want to do that? Is there another avenue? Another avenue that you can use to make sure that clock keeps on ticking. So to answer that question, yeah, there's a variety of different things, and you really have to dig deep and do your research on the background to find out what has delayed that. And a lot of times, even the dates that we have on our reports is not completely accurate. So we have to do some further background research to make sure it's accurate.